Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. Well, in general, nothing has happened yet, but at least we're starting getting some first signs of possible bounce on the euro currency, and actually not only on the euro, on the dollar index you could see the same story. So you could choose what you like more to trade, either CFD on the United States dollar, or maybe you're trading futures, so that's all the better. United States dollar index, or you could trade the euro currency, because thrusting action mostly stands very similar is on the euro currency as on dollar index. While market stands above 1045 area, the weekly chart has no impact, and weekly analysis has no impact on the overall picture, because if you take a look at the weekly chart, you could see that here is actually what we have. This is initial swing, and to build something new on the weekly chart, market has to break either these lows. In this case, we could appeal back to the support area that stands here with the fib level, probably 50%. Or it has to break the A point. In this case, even the market will create a new top, we again could rebuild the fib levels and return back to the weekly scale. But currently, you can see that overall price action since the summer stands in the inside of this AB swing. It means that we could use only the fib levels in this swing on a BC leg, which is actually covered by the daily chart. And from that standpoint, until market's flirting around, the weekly chart hardly applicable to the overall analysis, so it makes no actually impact on the ongoing process on the euro currency. The only thing that we could get here is keep watching on 107 area. Previously we already talked about this on a daily chart, so if you remember, those who watched our videos on Thursday, on Friday, should remember that we have specified downside target, this ABC top, COP 107. Actually, this is weekly target. It's because it better could be seen here. For the daily chart, it's too large, and it agrees perfectly with an area of the daily weekly oversold. And take a look, trend line, long-term trend line that lasts on also from the August 2023. So it's more than a year already. So that will be important level, but this is a bit far going perspective, so hardly we will use it on the coming week. Just remember that 107 might be important. 107, 107.50, somewhere in this area. Meantime, on the daily chart, what we have, there's 2 points to consider. First of all, market hits oversold together with confluence support, or just with the single support. In this case, it's not really important, which actually creates the background of the bullish stretch. By itself, the stretch pattern is not really strong pattern. It mostly pattern for retracement. It has some specific value for those of you who are trading on the intraday charts. You could use it as a background, to justify a possible long entry. But for the daily chart, it just tells that chances on the bounce, on some pullback, are increasing, and market actually could do this. In fact, we already see something that on Friday action was to the upside. Our particular interest, since we have the bearish context, we are watching chances for selling, because momentum here is very strong. For us, looks great, so we need the pullback to get good entry on the short side and trade and ride on this downside momentum to the downside. Whether this will be just on the minimum target of the breadboard, some minor retracements, or it will be downside continuation, we will see later. For us right now, our major task is to get the entry. That's what we will be watching for, and with it we will be busy on the next week. And that's about the daily chart. On the intraday charts, what we have on the fallout and firm chart, you could see that sometimes classical patterns working just amazing. You can see target has been reached perfectly on the classic double top, pips right to the target. Here we have some minor bounce. So for daily bread and butter, first level that we intend to keep an eye on will be probably 109.62, because this is 30% retracement fib level, and actually this is the first one where bread and butter might be formed. If somehow we will get the pullback right to the 110, retesting on this neckline, that actually will make our dreams come true. So this retracement, this pullback to the 50% level might be just great. Let's go step by step. So for scalp traders who are just watching for a possible taking long position, currently everything still stands ahead. So if we take a look at the hourly chart, I do not see something to speak about by far. We have the same channel. Yes, there's minor hint on a possible breaking out of it, but no patterns, right? So to justify the entry, yes, we have daily stretch, but I prefer to see some final shape in what market intends to show the bounce, shows the pullback. Obviously here we could watch for a hand shoulders, right? So minor pattern with this particular shoulder head, so maybe another shoulder might be formed. If it will be created on Monday and Tuesday, that will be some background that scalp traders on the intraday charts could follow. So listen towards what we have. The one warning sign, guys, that we have to keep in mind, if you take a look at the United States yields, you could see an interesting thing that market has created the grabber on Thursday. Grabber suggests taking out of this top. So as you understand, rising of the yields on the 10-year bonds in the United States will be the headwind for a performance on the euro. And here the critical moment will be what the grabber will be. Either it will be just stop hunting around the top. Once they will be grabbed, Russian risk might be formed, market will collapse. This is the first scenario, which will be okay. So it might be together with the process of the forming some reversal pattern on the euro currency, I mean bullish reversal. Or conversely, it might be the straightforward upward breakout and moving higher on the yields. That will be a different story. If it will be this way, well, I suspect that we even could not get any setup for entry. Your currency could just keep going lower. This is possible. So that's why, together with the analysis on the euro that we have specified, this is another point to watch. So keep an eye on the 10-year bonds. That might be important.